7 billion miles, the fourth straight monthly increase. Let's drill down a little deeper on this market here, how to make money on it, and what to expect through year-end. David Halupnik is with me, head of equities with First American Funds. Harry Rady, CEO and portfolio manager at Rady Asset Management. And gentlemen, it is always nice to have you on the program. Welcome back.
Thanks, Maria.
Hi, Maria.
Hi there. Let's talk about catalysts into year-end. We've got a market that is still up 50, 60%, depending on which average you look at. From the lows, we're looking at nice gains for 2009. What are you expecting for the rest of the year, David?
Maria, we're expecting the bull market to continue. You know, the risk trade that a lot of people are talking about, we believe will still be on. These stocks, you know, the lower quality stocks are undervalued. Typically, when that is the case, the market does continue higher, so we would expect the market to continue its upward move through year-end.
Harry, you agree with that? Any wrenches to speak of?
Yeah, I have a few wrenches. I have a bit of a different perspective. You know, we're very cautious on the market, and you know, our perspective is that we want to focus on out-of-favor, blue-chip, boring stocks. And so we're excited about utilities. Utilities, we think, they've been left for dead. They have not participated in this beta rally. We have not participated in this beta rally. You know, we want to own the best of the best, blue-chip, dividend-paying, dominant companies. And many of these utility stocks are down 50% and trading at decade-low valuations. And we think that this is just, we just think if they go back to market multiples, that there's 40 to 50% upside.
Well, is there any catalyst on the horizon that pushes people to invest in utilities? I mean, is it a dividend story that sort of gets more attractive in 2010, or something that you believe is going to be the actual catalyst to get things moving here?
You know, I think it's going to be a flight to quality. And the reality is the market doesn't allow valuation gaps to exist for very long. I mean, historically, utilities have traded at a market multiple or a premium to the market. So to have them trade at 30 to 40% discount to the market just doesn't make any sense to us, and we think the market will close that valuation gap.
David, let me ask you the same question. How do I want to invest in this environment if I am expecting a good year-end into 2010? As you see it, where are the places I need to be exposed to?
Yeah, the places you need to be exposed to are the more cyclical areas. So we do like financials. Some of these lower quality financials that have raised capital, that are selling below book value, that you see their problem loans going down, those look attractive. Some consumer cyclical stocks, technology stocks. So, you know, what I'm also saying too, which is different than your other guests, low quality stocks still are attractively valued versus those high quality stocks. And we believe lower quality stocks within each sector will outperform those higher quality stocks going forward.
What about 2010? Let's talk about, you know, what could be on the horizon in terms of turning this situation around. What do you worry about? You know, obviously we've got worries about commercial real estate, worries about the lack of revenue growth, and perhaps that catching up with the market at some point. Are there things out there on the horizon that you think could change this positive view?
Maria, you know, certainly taxes might be going up. The Bush-era tax cuts will expire in 2011, plus there may be additional tax raises in 2010. You have the worry of the dollar. You don't want the dollar declining too fast, too sharply. So as we move through 2010, there are some significant concerns for the market, but we do believe that'll end this year pretty good, start next year out pretty good. But there are some significant uncertainties out there. And one more thing, just the amount of policy that's being proposed, you know, creates bigger budget deficits, and we do have to get our house in order, and we do have to provide incentives for businesses and people to get excited out there.
Well, we're waiting for them. Any chance that they don't allow the Bush tax cuts to expire because we're still in a fragile economy? What do you think?
I don't think that will happen. I think being with this administration, Congress, Senate, I think they will let them expire.
All right. Gentlemen, good to have you on the program. As always, we appreciate your time tonight. We'll see you soon. Have a good weekend.
Thanks, Maria.
Thank you, Maria.
Harry, David, thank you. Up next, my one-on-one with the CEO of Vodafone. We'll talk international markets, get his take on the state of the global economy, which emerging markets he thinks have the greatest wireless growth potential. Later on, with signs of economic stability emerging, will cruise line operators like smooth sailing from here, or are the choppy seas ahead? Coming up, the CEO